Hello everyone, welcome back to the channel. My name is André Cardoso. I'm a financial market analyst specialized in harmonic trading and harmonic patterns. And as usual, today I bring you an analysis on the Forex market, and I hope these insights add some value to your trading journey. If you haven't subscribed the channel yet, please do so. And don't forget to activate the notifications bell, because the content, as I said before, the content here is time sensitive, meaning it depends on market timing, and we know timing is also one of the essential skills that we need to embrace in order to trade the financial market. So as you know, or some of you may know already, I've been collaborating with Forex Analytics for about 6 years already, sharing my market perspective based on harmonic patterns. This, of course, this helps people and traders of all experience levels prepare for potential moves by anticipating, the market's behavior. And today I will cover a list of assets, Forex, crude oil. We also cover gold, SPX 500 as usual, the German DAX, and at the end of the video I will leave a link at the top right of your screen dedicated to an analysis of the cryptocurrencies. So if you are an enthusiast of the cryptocurrencies, I will leave that link at the end of this video. Let's start with the DXY. So we have multiple patterns completed for the dollar. We have a bullish crab pattern at 98.91. We projected these patterns before on my previous video, and a bullish alt-bat pattern at 98.80. Actually, we have also nailed the default target for the heads and shoulders projected at 98.69. We have a new fractal support nailing that projected default target for the heads and shoulders pattern formation. So at this point, and based on the multiple bullish patterns completed on the dollar, I will anticipate an attempt of a recovery, which may force a move towards the 38% Fibonacci level, 99.94, eventually a retest of the monthly fractal support level again. If that happens, of course, we will anticipate a move to the downside for the euro and the cable, not necessarily with the same strength, okay, but we always expect an inverted correlation with the dollar, in this case for the fiber, now actually nailing also the 113, actually very close to complete the patterns that we projected before. So I will not be surprised to see also the euro versus the dollar starting to pull back after printing a new fractal at 114.18, right below the patterns, the same patterns for the DXY, inverted the alt-bat pattern and the crab pattern also for the fiber. We have the cable, and this is a fresh pattern that I'm sharing here with you. I shared these also at Forex Analytics, which I invite you to pay us a visit. This is the crab pattern for the pound. Golden Fibonacci extension reached at 135.65, so that's where the pattern completes. We expect a retracement also for the cable. We have also the euro versus the pound. Of course, if the cable starts to pull back, we may see the euro versus the pound starting to struggle, to break below these levels. If the cable starts to pull back, we may see this pair entering into a consolidation period and eventually ranging inside is what we may call an expanding triangle for an extended period of time. Even though, just to clarify, and because I called your attention before, this bullish bat pattern is not out of question at this point. So pay attention to this 83.63. That's a 88.6% Fibonacci retracement level, and right above the default target for the head and shoulders, which lies at 83.52, the 200% Fibonacci extension level. So pay attention to a break below these levels of support and eventually a bounce after completing these sequences. Of course, if the price fails to hold above these levels, we may see, as I said before, other patterns may emerge at lower prices, specifically the BAT pattern, the bullish alt BAT pattern at 82.61, an extended configuration of the default, the default BAT pattern. If the price fails to hold above the support, we may see the price extending and completing the alternate BAT pattern. So even though for now we should consider this as a next pressure element, price zone to consider for the euro versus the pound. The dollar versus the Norwegian krone. Let me reduce my time frame to give you a clear picture of this pattern. Golden Fibonacci extension already achieved, so we are talking about also another crab pattern, in this case for the Norwegian krone, completed at 10.080. So that's basically the golden Fibonacci extension level, and that suggests a move towards the 38% Fibonacci retracement level. So basically we measure the potential retracement based on the Fibonacci levels, and we may expect a move towards the 38% Fibonacci retracement at 10.200. That's where the default target for that pattern lies at. But always take into consideration that if the price breaks below the support and stays there without an immediate recovery, we will see the pattern invalidating. Okay, there is no sacred and granted patterns.
Transform your trading with Forex Analytix new platform. Introducing the complete market analysis platform, precision analysis, real-time insights. Subscribe today and save 40% on monthly subscriptions. Join us now and elevate your trading strategy.
Then we have the New Zealand versus the Japanese yen. I called your attention to this possibility last week. This is kind of a structure support, so we are seeing the price now struggling to break above these support levels. We have a new fractal at 84.61, and this is what, in my opinion, the level that we should consider in order to consider as a neckline. Wait for the breakout of that support in order to consider this edge and shoulders pattern formation. If the price breaks below these levels, you may see an attack to this monthly fractal support placed at 83.05. Even though there's also the possibility, if the price breaks above the intraday resistance at 86.17, there's also the possibility of a move, an extension to the golden Fibonacci level. And that being said, we will be talking about the eventual shark pattern, a false breakout below, and a move towards the golden Fibonacci extension level. Wait for the breakout of these levels and wait for the formation of this pattern at 87.15. That's the golden Fibonacci extension if reached. So we have multiple scenarios possible, both of them for a short, the bearish shark pattern at 87.15, and eventually a breakout below the support. Those are patterns that we'll call for for a bearish swing or a bearish momentum. Of course, I don't need to remember we have a daily fractal resistance at 87.71. If somehow the price breaks above these levels, we may see the price squeezing even higher. I don't need to remember those levels. Okay, the Canadian dollar versus the Japanese yen, we have very much the same situation here, but with a very particular difference. We are already trading above the recent intraday fractal resistance. Actually, we are threatening the breakout of this fractal resistance level, and I have a bearish shark, the very much the same pattern projected at 104.73, golden Fibonacci extension level. As always, also consider the potential move or the eventual push higher towards the 224% Fibonacci extension level, but at this point we should pay attention to the golden Fibonacci extension 104.73. The completion of this pattern may suggest a pullback. I'm not saying the price will rally to the downside. Okay, I'm just expecting a retracement, a move, a retracement, a pullback towards the default target 103.86. If the price completes the pattern, that's the the default target for that shark pattern, the 50% Fibonacci retracement level. Then let's jump into the commodities. We have gold completed the bearish crab pattern that I called your attention last week, completed at the same time that we retested, or let's say retested, reinforced, let's see how the market will behave, this structure resistance. So this is a parallel descending channel. We are seeing gold reacting to that structure, but also to the bearish golden Fibonacci extension level, the bearish crab pattern formation. So that being said, I will anticipate a pullback, another one towards the 38% Fibonacci level, 32.72. That's where the price should find some pressure, and that's actually the default target for the crab pattern on gold. We have also crude oil, something to consider. This is not a pattern yet. We need to wait for the for the eventual the breakout of the support level. It's essential. We need to wait for the violation of these levels of support, specifically $60.45. That's the reference point for our neckline. If the price breaks below these levels, we anticipate a move towards the 57.45. That's the default target for this eventual edge and shoulders pattern starting to unfold on crude oil. I will not be surprised to see a move higher to form the right shoulder, close to the 61.8, but we are now seeing actually the 50% exerting some pressure, and eventually that may form the right shoulder for crude oil, and we will pay attention, and I think we should be paying attention to these levels of support. Then, almost finishing, let's jump into SPX 500. A nice recovery after printing a new fractal support at 57.43, and we are now actually nailing the previous intraday resistance back to the previous week, of course, 58.81. And also we may consider this as a descending wedge, and we are approaching the structure resistance of that pattern formation. So basically I will not be surprised to see SPX 500 starting to pull back from these levels. 66.13. German DAX, just to finish this sequence for today, bearish outbat pattern, just to clarify, it's still available, still one of the possibilities, a decent pullback, just to fill the default expectations for that same pattern. That being said, as I said at the beginning of this video, I will leave at the top of your screen, at the top right of your screen, you have a link which will guide you to the video related to the cryptocurrencies. Some price structures that I think we should be aware, at least for those who are considering the crypto market or the cryptocurrencies market. I think it should be useful to consider some of the price structure that we are seeing, or that's starting to unfold for the cryptocurrencies. So I invite you to check that video, and I hope that also brings some value to your journey. That's all for today, and I hope to see you in the next video. See you there.